You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome back, everyone, to another Founder Friday here on The Vocal Technologist. I have to say, looking at the calendar this morning, the vibes are, well, they're specific. It is Friday the 13th, February 2026.
It is indeed. Historically, a date for bad luck, black cats, horror movies. Though looking at the NASDAQ and the private markets this week, I think a lot of founders might be feeling that superstition is just a financial reality now.
I was going to say, is it bad luck or is it just a really, really volatile reality check? It feels like we're in a moment where the rubber isn't just meeting the road, it's like burning right through it.
Reality check is putting it mildly. We are seeing what people are starting to call the great software correction. And I want to be clear right off the bat, this isn't just a bad week. It's not a blip. The safety nets that we've all relied on for a decade, they're gone.
Gone. That feels a little dramatic. I mean, we've seen dips before. 2022 happened.
This is different. The private equity escape hatch is basically closed. The old playbooks, they're just failing. We're seeing a fundamental shift in how value is created in this AI-saturated economy. It's not a recession, it's a total restructuring.
Okay, let's unpack this because I don't want this to just be doom and gloom. Today has to be about survival, right? About the new rules. We're going to get into why your IQ and even your EQ might be outdated and why seat-based pricing, which is how basically every SaaS company makes money, is absolutely killing you right now.
And we're going to talk about vibe coding, which, yes, sounds like a meme, but is actually the new literacy.
I still can't believe vibe coding is a real thing, but we'll get there. First, let's look at the wreckage, the great software correction. Let's hit the numbers because they are staggering. The IGV, that's the software ETF, it dropped 28% from its peak.
Which is a massive erasure of value. Billions just evaporate.
And it's not just the small guys. I saw Microsoft dash cratered 12% in a single day. And the craziest part? They beat earnings.
That's the critical detail right there. They did better than expected, and the market punished them for it.
And then there's Oracle.
Down 56%.
That's catastrophic. So explain this to me. If a company says, hey, we made more money than you thought, I usually buy that stock. Why is the market freaking out?
Because the market is forward-looking. It doesn't care about last quarter. It cares about 2027. And it is finally pricing in this structural shift. For 40 years, the model was simple. You sell seats. More employees, more licenses. But AI is eating the application layer.
Right. So normally my company grows. I hire 3 junior analysts. I need 3 more licenses for Salesforce.
Exactly. But now you have an AI agent, and that agent does the work of those 3 analysts. So you don't need 3 licenses. You might need 1, or maybe none.
So the revenue correlation with headcount is just gone.
It's broken. And that's why you see vertical software stocks down 43%.
Okay, hang on. Define vertical software for anyone not deep in the SaaS weeds.
Sure. It's software for a specific industry, for dental offices or construction or salons. Historically, great businesses, they had moats. But now, investors think AI agents can just learn those specific workflows faster than a software company can update its code.
So the market's saying, we don't need a special app for dentists. We just need an AI that knows how dentistry works.
Precisely. And that's why DevTool software for developers is down 21% too. The market gets that efficiency means fewer humans buying software.
But this is where it gets interesting because it's not hitting everyone equally. There's a huge divide based on speed.
Yes. It's almost a perfect correlation with growth rates. The slow growers companies at, say, 8 to 11% growth are getting crushed. But the fast growers, the ones at 21, 22%, they're holding up.
So the market is basically betting on who can outrun the disruption.
The market isn't asking if AI will replace software. It's pricing in who is fast enough to reinvent themselves before that wave crashes. If you're growing slow, the market assumes you're dead.
Which leads to the next scary part. A few years ago, if you couldn't outrun the market, you had a backup plan. You'd build a nice little SaaS company to $20 million ARR, growth slows, and you sell to private equity.
The PE escape hatch.
Is that door locked?
That door is welded shut.
Welded shut? Come on. Surely there's always money for a profitable business.
You'd think, but look at the data. 2025 saw $587 billion in tech M&A. Sounds huge. But if you strip out the 5 mega deals, the average deal sizes actually dropped 17%.
So the whales are eating whales, but nobody's buying the minnows.
Correct. And the distress signals are flashing. The tech bond distress ratio hit 9.5%. This tells us that efficient growth, that buzzword we all loved. It's no longer a substitute for actual growth.
That is a tough pill to swallow. I mean, for 2 years, every VC was screaming, efficiency, EBITDA. And now they're saying, wait, if you're just efficient but not growing, you're dead.
Because in an AI world, if you aren't growing fast, you're likely being automated away. If you are solid but not spectacular, nobody's coming to rescue you. PE firms see a slow-growing software company as a melting ice cube.
Okay, so the market's brutal. The exit is gone. This brings us to the human element. If the environment is this hostile,
Right.
you actually have to operate.
What a concept.
Right. But what kind of person survives this? We've all heard about IQ, EQ. But there's a new term floating around, AQ.
Agency quotient.
Talk to me about AQ. How is this different from just being, driven?
So think of it this way. IQ is your processing power. EQ is how you navigate people. AQ is the ability to actualize. It's taking an intention, an idea, a goal, and turning it into reality.
It sounds like hustle, but it feels more specific.
It is. In a world where AI can write the code and design the strategy, the bottleneck isn't knowing how, it's having the agency to direct the tools. High AQ people don't just consume AI's output, they direct it. They build with it.
It's the difference between asking a chatbot a question and hoping for a good answer versus using it to architect a solution.
Exactly. And this changes how we think about leadership. You have the up-level or replace dilemma.
Oh yeah, the classic, do I fire my college friends who helped me start this question?
It's agonizing. But the founder of ZoomInfo had a fascinating take. He pointed out every exec was a first-timer once. He argues that external hires, the big guns, aren't automatically better just because of a resume.
Because they might have done it before, but they haven't done it now in this market.
Right. They haven't done it during the great software correction.
So the test isn't, have they done this before?
No. The test is, can they do what the business needs for the next 12 to 24 months? It's a shift from experience to capability. To AQ, can they figure it out?
I love that. It reminds me of the incompetent confidence complex. We reward people who are loud and confident, even if they're wrong.
We do. We mistake charisma for competence. But the best operators, they usually start unsure. They iterate. Real confidence follows competence. It doesn't precede it. And in this market, false confidence gets exposed so fast.
Speaking of fast, let's talk about how we build things now. You mentioned vibe coding. I have to admit, I thought it was something teens were doing on TikTok.
It does sound like it, but it's a very real shift. Vibe coding is basically rapid prototyping without engineers. It's using AI tools to close that gap between having an idea and seeing it work.
So not just writing code, but building internal tools, turning a slide deck into an interactive app.
Exactly. It's getting the vibe of the product right without worrying about the syntax. Hybrid teams are spending 11% of their day in AI tools now. Adoption is at 84%. Product managers, designers, they're now building the thing.
That's empowering. The barrier to entry is gone.
But there's a flip side, right? If it's easy for me to build, it's easy for you to build. And easy for my customer to leave.
The churn apocalypse.
Sounds like a metal band. I assume it's bad for business. It's a nightmare. Retention is incredibly hard because AI lowers the friction to start. It also lowers the friction to leave. A lot of these users are hobbyists. They come, they go, they vibe with your tool for a week, then they're on to the next shiny thing.
So how do you keep them? If the software is a commodity, what's the moat?
Real retention only kicks in when it's part of a habit. But more importantly, we are seeing a return to services.
Services? Like humans? I thought software is supposed to get rid of the humans.
The pendulum is swinging back. You have to move upmarket. And to do that, you need to add FDEs, forward deployed engineers.
Explain FDEs. That's Palantir's model, isn't it?
It is. It's a human expert who goes into the client's business and makes sure the software actually works for them. When everyone has the same AI, the differentiation is implementation. The software is cheap, the trust and the outcome are expensive.
Which flows right into marketing. If everyone's spamming AI-generated content, how do you stand out? It's all just noise.
It is. The old playbook of build the company brand is failing. The new strategy is the Lighthouse Playbook.
I like the image. Shine a light in the dark.
Basically, stop trying to make the company logo famous. Find the people on your team who are already respected, your lighthouses, and build their brands.
That makes sense. People trust people.
Yeah.
But that's scary for a founder, isn't it? What if they leave?
It's a risk. But the alternative is being invisible. Look at Linear. They didn't just market a tool. They positioned their people as masters of craft. Or Stripe. They didn't just say, We Do Payments, they talked about increasing the GDP of the internet and pushed their smartest people to write about it.
So AI lowered the cost of building product to zero, but the cost of trust is still high, maybe higher than ever.
That's the key. In a low-trust world, authenticity is the premium asset. And you know what else builds trust? Going outside?
Whoa, bold strategy. Touching grass.
Events are the new growth meta. In a digital world, a live interaction is incredibly high leverage. You can't automate a handshake.
It's funny, we're circling back to old school things. Handshakes, trust, competence. Speaking of speed, I saw a note about Reid Hoffman that blew my mind. He's stopped typing 75% of his messages.
Yes, he's using a tool called Whisper Flow, apparently 89% accuracy, 0 edits. He dictates emails, Slack updates, everything.
And this isn't just Siri, call mom. This is complex stuff.
It's all about velocity. The biggest founders are changing how they physically work to gain an edge. It's an arbitrage on time.
That's the theme today, isn't it? Arbitrage on time, on agency, on trust.
It is, and that leads to the biggest picture, the end game.
I love this concept. Endgame thinking. Sounds like chess.
It comes from chess and warfare simulations. You work backward, you simulate the win, and then you try to collapse the middle game to get there faster.
So you figure out where you want to be, and then you just skip the steps.
You try to, but there's a trap. It's easy to mistake the ability to model the outcome for being close to it.
Just because I can imagine the skyscraper doesn't mean I know how to pour the concrete.
Exactly. You still have to play the messy middle game where all the risk lives. You can't simulate your way to the finish line.
This reminds me of that story you mentioned about the blast furnace.
Yeah.
Something about rented virtue.
Right. Abraham Darby in 1709, he kickstarted the Industrial Revolution. But businesses that last for generations, they often have a core that looks irrational.
Irrational how?
They do things that can't be justified by pure profit. They have a moral center, an obsession with craft. They treat people better than the math says they should.
So in this AI megacycle with all these overcapitalized companies just grabbing for cash,
We will see a lot of rented virtue, companies pretending to have a soul because the marketing data says it's a good idea, but the ones that survive will have something real at the center. They won't just be simulating the end game, they'll be building it because they actually believe in it.
that's powerful. It's not the tech stack, it's the soul stack.
Which brings me to a final thought. There's an old business phrase, don't boil the ocean.
Right. Don't do too much. Focus. Niche down.
I think with superintelligence on the horizon, we need to retire that phrase.
Retire it. That's classic advice.
It's advice for a world of scarcity. But fear of the future is proportional to the smallness of your ambitions. If your plan is just to maintain the status quo, then yeah, AI is terrifying. But if you want to build something bigger, solve impossible problems, this is the best news ever.
So go ahead and boil the ocean.
Boil the ocean. Use the leverage. This is Jevons paradox.
Okay, quick explanation of Jevons paradox.
It's the idea that when tech makes a resource more efficient, we don't use less of it. We use vastly more. When steam engines made coal more efficient, we didn't burn less coal. We invented trains and burned way more.
So AI makes intelligence efficient.
And we're going to consume massive amounts of it. We have infinite intelligence on tap, so use it to do something massive.
That is a hell of a place to land. The market is correcting, the safety nets are gone, but the tools to build your AQ, your vibe coding, they've never been better.
The ceiling has been blown off. It's just that the floor has been removed, too.
Well put. So I'll leave you all with this question. Are you building for the end game, or are you just simulating it?
That's the question.
Thanks for tuning into this Founder Friday. Keep your AQ high, keep building, and we'll catch you next time. Stay vocal.
Spoken Tech for your ears.